see. Admiration cloud passing by like Lady Godiva.
Woo! Here we go. All right. MicroStrategy. Actually, check that. Did it again. Strategy. MSTR True North, episode 18. Boom. We got the crew. We've got strategy going down today. We've got some convertible bond offerings in the market, potentially being priced. And we've got quite a few things to talk about today. So things we want to hit on. We want to hit on convertible debt. We're going to get into a little bit of the nitty gritty. We're going to go through the offering because I feel like many people don't even really read the offering. And so we're going to go through it and walk through how that works. Did a little bit of analysis on the convertible debt, the historical convertible debt that's been issued, when it was announced, when it was priced, the initial announcement size, the green shoe option, and the actual final placed figures. So we could see, historic oversubscription and how much that's changed, which will be great. And then we're going to get into our research segment where Dan's going to share a bit of information on options, what we're seeing in the options market, some interesting activity today, particularly in the last 20 minutes. Unfortunately, Adrian had to take his dog to the vet last minute, so he's not going to join us. He was going to go through Max Payne, but maybe we'll work through that. We've got Neetu going to run through his MSTY analysis, how his battle with MSTY is going. Which hopefully you're not getting kicked in the nuts anymore, but we'll see how that's going. And then Ben is going to join here in a short minute, and he will help round out the panel on convertible debt. Last piece, we're going to have a little bit of open discussion on 13F filings, talk about bears, some trends, some surprises. We can maybe get into STRK. Who's stronger, Jeff or Dan? That's a good question. We'll find out soon. Ben, Dan's in his prime right now. And we'll see where we go. So maybe Tim, over to you. Episode 18, not financial advice. Thanks for joining. We've got a crew here.
We've got a crew. Can you hear me? I plugged in my microphone, but I'm not sure if it's.
I can hear you.
All right.
I can hear you.
No technical difficulties. Welcome to True North. What you may hear, it will be amazing, but it's not financial advice. It's for educational, informational, aspirational, motivational purposes only. Back to you, Jeff.
Beautiful. Thank you, Tim. So what Tim says is incredibly important. None of this is financial advice. For those of you that are new here at MSTR True North, this is a group of people that's getting together to talk about what's going on, everything strategy. So we want to be at the front end of this trade. We want to be at the knife's edge. There are hundreds of things that are happening all the time, and we are a crew with very different backgrounds of research and analysis, and our goal is to put all of our information together. We would have been having this conversation regardless of whether or not people were here, and our goal was to just do this broadly so everybody can hear the things that we're talking about, because this is a very complicated trade. There's a lot going on. This is very sophisticated finance, and it's difficult to understand from a very typical retail investor point of view. So our goal is to provide some clarity, be the shining light in a sea of darkness, helping navigate the uncharted waters. We're in completely uncharted territory. There's never been an equity like this before that's completely converted their corporate balance sheet into a completely new asset type. And yeah, it's complicated. So you guys have anything else to add before we get into it? Talk about convertible bonds.
I think today there's actually a lot to go over. Yeah, we've got some really important topics that are super relevant right now. The convertible notes being one, the volatility being another, just kind of the setup for the spring. So I think you should stick around, and we'll try to do a really good job dissecting all of these technical aspects of the equity. This is when things get exciting. There's been chop for 3 months, but now it's time to talk about something else.
This is so the image that I put on the episode this time is this beach ball has been held underwater, and it feels like it's about to be let up and out into the open. So it's exciting times. Leverage is being put back onto the balance sheet. We are leveraging up the balance sheet again, and we're about to see a potential significant disagreement in the market on valuation. Right? If the price of Bitcoin moves at all, everybody's going to be running around with their heads cut off trying to figure out how to value this thing within a traditional financial framework when, you know, the rest of the Bitcoin world is looking at this in a Bitcoin framework. So it's going to cause a lot of disagreement in both directions. So it should be exciting. All right.
Yeah, and I think the key is this idea of volatility. We talk about it all the time, but without the volatility, everyone says volatility is vitality. There hasn't been volatility the past few months. It's just been kind of down slowly. So it has been painful. And so I think the reinvigorating of the volatility is so key here. We got the signal. We got the very important signal from Saylor that they will be issuing slowly these convertible debt offerings into the market and, you know, creating what we are purchasing MicroStrategy. The most important part is that debt package.
Beautiful. Here we go. Let's jump into it. What's up, Ben?
Hey, Ben.
What's going on, guys?
You know, we're cooking here. We're cooking. We're getting
Don't
off.
stop on my behalf.
Yeah. Here we go. Okay. Strategy announces proposed private offering of $2 billion of convertible senior notes. So first thing that we're going to hit on here is this $2 billion of convertible senior notes. How does that impact the balance sheet? And what would that do to the balance sheet? So for those that have been following along, we've been pulling up this spreadsheet here, looking at the leverage, you know, MSTR's leverage over time. And as of today, 2/19/25 got 478,000 Bitcoin on balance sheet. 96,900 is the Bitcoin price as of right now. I guess it's 97.3, so higher than that. $46 billion of assets and $6.5 billion of debt. So a current leverage ratio of about 14%. Of that $6 billion of debt, $3 billion of it is currently trading in the money. That's $3 billion of debt that's in the money, effectively trading as equity. So that could be called at any point, and that debt figure can be dropped by about $3 billion. But we're going to leave it at 65.20 just to be conservative. Now, for demonstration purposes, I wanted to add, you know, what if we add $2 billion of additional, actually $2.3 billion of additional convertible debt to the balance sheet? How does that impact leverage ratio? So in this scenario, you can see adding $2.3 billion of debt to the balance sheet at today's Bitcoin prices increases the leverage ratio up to 19%, or the kind of this debt coverage ratio. Looking back historically, this is still significantly under leveraged relative to where they've been historically. So there's significant capacity to continue adding more debt to the balance sheet within, you know, the existing risk framework that they've put in place and they've communicated to the market. So Ben, as you've mentioned, right, you know, this initial offering that we're seeing today may be the first in a string of future offerings that we may see over the next, you know, 30, 60, 90 days.
Yeah, I think this is just kickstarting everything. If you look at this first one, this is kind of their first step back into re-leveraging themselves. And when the IV gets as low as it has been, right? Bitcoin's IV has been down. I think it's been around 54 or something to that nature. And that brings down MicroStrategies, particularly given because of how de-levered they got. This is them wading back into the market. And so I wasn't surprised to see that the pricing was coming down. I'm expecting, I think, 35%, somewhere in that range. Not surprising. I do think that they're going to upsize it. I think it'll probably be like a 2.5 with a 500 million green shoe to it. And so you'll end up at 3 million, which is where they started rebuilding the ladder with the last offering that they put out. So I'm expecting this one will end up being very similar. And then hopefully that'll jumpstart the IV again, get this thing moving a little bit. If they get a little more favorable IV, they can start to price the next round. And I think you're probably looking at one of these maybe every other week. For the next 5 weeks until they get at least 3 of these out the door is kind of my guess on where they're going here. So soon enough, they'll be back to being levered back up, and the stock's going to start moving again. I think it's all getting set up now. Yep,
absolutely. Getting set up again, looking at historical leverage, right? The reason we've seen IV go down is the leverage. The ATM has been used to add a ton of Bitcoin to the balance sheet, which has deleveraged the entire company. So you can see leverage ratio coming down over time, especially when you exclude the current debt that's trading in the money. So Ben, to your point, we've got significant headroom and capacity here. You know, I think you estimate that the first pricing of this tranche may be around 35%. And somebody even mentioned in here, haters are already spreading FUD that MSTR is cutting the premium to 35% is proof that the MSTR is busting, which is so funny. Like, it's just so funny. It's like, no, this is just like you're pricing, structured finance. Like, this isn't like proof of anything busting. It's just a function of what the underlying data that is going into the pricing of the vehicle. So
I think the problem is so many people got into the mindset that when you're MicroStrategy, you can just go out and force terms on people. That's just not how these products work. I mean, these are very structured products. And so, yeah, it's looking at the volatility. It's looking at the risk-free rate of capital. It's looking at the credit spread that you need to apply based on the term of the bond. I mean, it's very methodical how they end up pricing these. And sometimes if they're looking to incentivize more investors to go bigger, right? If they're trying to upsize an offering, they may cut it back. Because I think the initial pricing that was out there was like 45% premium. And then they rolled it back to 35, likely to entice the upsizing back into that $3 billion range. So it's not as one-sided as people would like it to be. This is very structured. It's very methodical in how they do the calculations. This isn't a MicroStrategy pushes this out and says, take it or leave it. It's just not how these work.
Yeah. I mean, when you're working with this big of capital, and I saw this in reinsurance all the time, like this was literally my job. Like when you're working with huge tranches of capital, there's no consensus on what price is. So you have to go out to the market and get prices quoted. And when you go out to the market and you get prices quoted, it's, okay, well, I've got 50 million at 55% conversion, but if you go down to 45% conversion, I'll do, 150 million. And like the market always kind of has some leverage depending on like how much capital you need to raise and like how many different capital providers that you need to go to or that you attempt going to in each one of these circumstances. So it's, all market dependent, depending on underlying data, what's going on at the time. And I would suspect this might even be any FUD that comes out saying that, the fact that they're cutting the premium is an impact, is MSTR being dead, is probably from a bot. It's probably from a hedge fund that's short here trying to spread FUD. It could be even from people that hold MSTR and just want a cheaper price, right? Like you got to think about incentives and thinking who's potentially saying this type of stuff, because it's crazy. It's totally nonsensical on how the market, that type of market works. Okay, so I'm going to get into the next piece here, which I think is really interesting. And I did this analysis right before this. So what you're seeing on the screen here is looking back at the historical convertible debt offerings that MSTR launched in 2024. So we've got a 3.8 inception, 3.14 inception, 6.18, 9.19, 11.21, all with different interest rates. And the purpose here is to look at when they were announced, when they were priced, and when they were closed. And in each one of these instances, and we'll look at this. Dan's got a chart as well where we look at the price and you look at the converts relative to the price of MSTR, which is a bit convoluted because I think you need to look at the price of Bitcoin as well in the whole grand scheme of things. But the purpose of this is showing that after announcement, most of these deals were priced within 2 days, with the exception of the June offering, which was priced in a day. So I would suspect that we'll hear the final pricing of the MSTR convertible debt tomorrow, and probably will be closed within 5 days after that. And the other thing I wanted to point out here is with the initial announcements and the green shoes, there was a significant variance here. So in these March offerings, the initial announcement of the 3.8 convertible bond was, they said that they would issue $600 million of convertible debt. They had a $90 million green shoe option. So the initial announcement was $690 million, and the final closed amount was $800 million. So they were 16% oversubscribed on capital. So they went out with a smaller number, ended up getting a much larger number. And for those who don't know what a green shoe option, there was this company that back in the day that allowed for an oversubscription to place additional capital for a deal that they did. I don't know, it might have been back in the 40s or something. And they were the first one that had this provision of a green shoe offering to minimize volatility of being oversubscribed on a deal. And it's been called a green shoe option ever since. So it's just an additional buffer of capacity for additional capital that could come in the door on any one of these transactions. So interestingly enough, going to the next offering in March, which was like 5 days later, they came out, said they were going to raise $500 million, another $75 million buffer, ended up raising $600 million. So 5% oversubscribed over on top of the green shoe offering. So even just additional capacity on top of that. Now, where this gets really bullish is you look at the most recent offerings in June, September, and November. So in June, came out, they said they're going to raise $500 million, $75 million green shoe, ended up closing $800 million, 40% oversubscribed. The next one, September, came out, said they're going to do $700 million. There was a $105 million green shoe, and they ended up placing $1 billion, 25% oversubscribed. The last one in November, they said they were going to come out with a $1.75 billion, $250 million green shoe for a total of $2 billion, ended up placing $3 billion. So that one was 50% oversubscribed. So the point here, and each of these are getting bigger over time, as we've seen. And I think the point, one of the really interesting components here is that the green shoe option alone of the November offering was bigger than the green shoe of like all of the prior offerings combined. And the general scale of the amount of capital that they're raising, right? A $2 billion announcement, a $2.3 billion announcement is bigger than the entirety of the March convertible debt offering and the June convertible debt offering combined. So if you think about the scale here, this is like taking the March, both of the March offerings and the June offering, and combining them into one without even thinking about the potential for oversubscription. Now, how much might they raise, right? So if you got a $2 billion offering, $300 million green shoe, so announcing $2.3 billion, if they're oversubscribed by 25%, we're looking at something like $2.8 billion of capital being raised by this convertible debt offering. Let's assume that they are able to buy Bitcoin at an average price of $100,000, which is increased from where it is right now today. That would result in about 28,750 Bitcoin purchased. They have got 478,000 Bitcoin right now, so a future Bitcoin stack of 507,490 Bitcoin on the balance sheet. So for those that are betting in the poly market, there's a chance. There's a chance that you've got 500,000 Bitcoin on balance sheet before March? Before the end of March? Or before March?
Beginning of March.
Beginning of March. Okay. So yeah, you got 10 days. It's very, very possible. And even if this is a calculator, so I could go and change this. Even if this gross up factor is 10%, or even 5%, like the worst one back in March, you're still looking at raising $2.4 billion, which would result in about 24,000 Bitcoin purchase. So 502,000 Bitcoin stack before March.
The other really notable thing about this one is the banks that seem to be participating. So it's all bulge bracket investment banks. So Morgan, Goldman Sachs, Citigroup, Barclays, massive, massive banks. So this is really integrating its way into the traditional finance world in a big way, right? The big players are here to play now. And I think all of these banks are starting to figure out that this is a dream for them. They want to support LBE strategies as much as they possibly can, because this is potentially decades long fee revenue for them. And this is essentially where a banker makes a career. You get a customer like MicroStrategy, and you get in their good graces and you execute with great terms, and you help them execute really, really fast. So you become their go-to call anytime that they want to go out and hit the equity markets. I mean, this is exactly what they want. So seeing the really big banks get involved is super bullish for this entire industry, because it shows that there's a ton of interest here, and enough so that those major banks want to be significant players now.
Yeah, everybody's getting paid, right? Ben,
Yep.
to your point, and I made a video on this back in the middle of the summer when nobody was paying attention to MSTR. One of the biggest things here is that all of these convertible, these banks that are selling these transactions, the middlemen in between, are making millions and millions of dollars.
Tons of money.
Millions and millions of dollars. It reminds me, and that was the scene that I took from The Big Short, of these guys going, it was the brokers that were selling the mortgage-backed securities, and the scene cuts to this guy's like, what's with the Dom? He's like, well, I just sold this idiot $500 million of mortgage-backed, swaps on the housing market, and like that's where we are with this thing right now, but it's just getting started. Like it's just starting.
Jeff, is this a good time to tell the Wall Street story from tonight?
Yeah, tell your story.
First of all, I was on the Upper West Side today. I come out of the post office and the guy in the mail truck, the mailman goes, "Yo, I've been listening to your podcast to support you." I go, "That's awesome." Give him a fist bump. I'm at dinner tonight at Porterhouse in Columbus Circle with Dylan LeClaire of Metaplanet fame and Liam Nelson of Early Riders. And we're sitting down. We get our tap water. I order a Diet Coke. Not a joke. Literally ordered a Diet Coke. And they're just sticking with water. So like the server comes over, but you know how at like nicer restaurants, sometimes you have like 7 servers and a maitre d'. So this guy comes over, says Dylan, puts out his hand, and Dylan shakes his hand. I'm like, this is weird. How does a maitre d' know what Dylan's name is? And he looks at Dylan, he goes, "I love what you're doing." And Dylan looks confused. He's like, "Oh, thanks. Who are you?" And he's like, "I'm just a no-name investor." And I'm like, "Oh." At this point, I don't think he even said that yet. He looks over at me. He goes, "Oh, Tim, love your podcast. Love what you're doing. Keep doing it." I'm like, "Oh, thanks." I said, "What's your first name?" Right? Because I'm like, I heard what he said to Dylan. He's like, "No, don't worry about it. I'm just a no-name investor." And he's like, "Hey, love what you guys are doing. Keep it up." And he walks away back to his table. And I'm like, is this an institutional investor?
Where am I?
Oh, he also said, "Dylan, keep doing what you're doing. We're going to be buying more."
Yeah. Amazing.
So it's somebody. Maybe it's an investor, maybe it's a banker, maybe it's an institutional investor. But I said, "Dylan, this just proves that no matter how short you cut your hair, you will be recognized in public."
Does he have a buzz now? Yeah, we'll see.
It's a little bit shorter. Yeah.
Nice. Well, I mean, look, we've got 5,700 eyeballs on this episode right now. We're 23 minutes in. Tim, you've got thousands of people that are watching what you're doing. It only takes 2 eyeballs, right, to make a Bitcoin purchase, right? And you could have just the right person that's watching that manages, hundreds of millions of dollars or billions of dollars of capital that wants to adopt a Bitcoin treasury strategy, because we're explaining what's going on and you're literally seeing it, like without the content that you've put together and that we're kind of doing here. Some people may not even know that like a lot of this stuff exists. So we're all doing our work and pushing it out, explaining what's going on here, because to me this is the most interesting story in all of finance. It's not just strategy, it's this revolution that's occurring, this I guess evolution of digital capital, a new frontier of asset to hold on your balance sheet. So keep up the good work, man. You're going to start getting noticed everywhere. I haven't gotten noticed yet because my secret is just take off my glasses and walk around and nobody knows who I am.
You just got to go to New York. I think I was in New York last week as well. And same thing, right? I was talking at an event and it was all institutional buyers and banks, and most of them had heard of True North. Most of them have seen the content. So it's wild, the number of people that get exposed to it this way, because I think everyone's just trying to figure out what the heck is going on. And luckily for us, we've been out here talking about it for a very long time now. So it's amazing what the reach is.
Yeah, it's great. Cool. Well, there was one more question in here. I want to hit it real quick. It was explain MSTR even needs the brokers and banks. Why not finance this themselves? The brokers and the banks are really the middleman facilitating the transaction, right? Like strategy, they've got limited number of employees, right? And there might be, I don't know, 60 people that buy this convertible debt. Like the amount of paperwork, associated with this is just like totally mind numbing. And like, that's what these companies do. Like Goldman, Morgan Stanley, like they facilitate these transactions, all of the paperwork associated with it, all of the contracts, all of the pricing, getting capital, front, like start to finish. They're the ones that literally get the money from institution A, goes through the bankers over to strategy, and like that's how the capital is transacted, or they may facilitate like a wire, or, however it works.
They're the ones that accelerate this whole thing.
Yeah.
Right. I mean, they've got these ECM teams that are out there, and
Marketing.
they're really connected into all the institutional capital players. When you're someone like MicroStrategy, or they have their private capital markets teams, I'm screw off. I'm never going to get it right. It's going to be a year before I stop. But they've got all these connections that make the speed to getting the capital really fast, and there is a value in that. So for a company like Strategy,
good job.
Yeah, there we go. It's the only time you get it tonight. The rest of the time it's MicroStrategy. But
Ben, what's an ECM team?
Equity capital markets. Sorry. So investment banks will have an equity capital markets team, which would do, any of the equity linked securities, including convertible bonds. And they've got debt capital markets that are doing all like the true fixed income products that aren't equity linked. And then PCM would be private capital markets. And so they'll all typically have each of those departments. And so for these types of transactions, you're really working with the equity capital markets teams. And because they've got this down to such a science, MicroStrategy, going back to it, MicroStrategy can basically call them up and they can execute these at lightning speed. I mean, the time that they get from getting all the documents prepared to getting the capital in the door when you're raising $3 billion is incredible.
Oh, it's insane.
There's incredible value in that type of a relationship. And now that the bulge bracket banks, which just means very large investment bank, that's what bulge bracket means. Now that they're playing in here, they've got even deeper connections. So as they need more capital, these are the guys to go find it. So there's a value in paying that fee and letting those guys do all the work behind the scenes to make this happen.
Yeah, it's all connections, right? I mean, you've got a limited number of people that work at any of these one institutions, and you might have like this guy at Morgan Stanley is like, oh yeah, I'm good buddies with the guy over at Deutsche Bank, and I had a call with him last week, and they're trying to get in on this, and that's how this stuff works. It's like it's all these conversations that need to happen between humans, in between like all of these different capital parties, between different people across the planet. And to your point, like raising $3 billion of capital in like 3 days and having it closed in 5 is just totally mind-numbing, incredible, just totally incredible. I mean, I went to the bank today to try to send some money, and I had to do a wire transfer, and they're like, well, it's gonna take a couple of days, and like this guy's gonna get it tomorrow morning, and he's gonna make sure everything's right. I'm just like, Jesus Christ.
And why do you need it? And what's it for? And fill out this form. And what was the source of the funds? Where'd you get this money?
Yeah, why do you need to do this? And I'm just like, wow, this is the use case for Bitcoin. Like I could have sent this hours ago. Instead, I've just been thinking about this headache of this thing I have to do for like the last week, because I have to go to the bank and do it because I can't send more than $2,000 on my bank account. And like, oh my God, just so stupid. But
you use the Lightning Network, Jeff. You could have orange pilled someone in that transaction.
Yeah. Yeah, my past employer. No, I don't think that.
Okay. That might be frowned upon. Do it the snail mail way.
Yeah, exactly. Okay, let's jump into this convertible debt offering. I just want to walk through this PDF because I think these details are important. I'm sure 85% of the people don't actually click on the thing that Saylor, tweets. And there's actually a PDF behind the scenes, so you can actually go read. Like, here's what the offering is constructed of, and here's what it's made of. Like, anybody can go look at this stuff. And if you've got a significant amount of capital in here, I would go look and try to read through some of the stuff. But I've highlighted some things if you don't want to read, and maybe we'll go through together. So, $2 billion of aggregate principal amount of its 0% convertible senior notes. Okay, so 0% coupon, aka no interest rate. There's no interest component of this debt. They are not going to have any interest obligation. Convertible, that means it's debt that's future convertible into equity. Senior notes, this is senior to common stock. In the event if there was a bankruptcy, all of the senior note holders get paid out before any of the equity holders. Again, the note holders are less risky, and the common stock equity holders benefit from taking the risk that these note holders don't want to take on.
Should we just go over where the preferred stock lines up in the
Sure.
structure?
Yeah, so you've got the senior notes are the most senior. The preferred stock is like in the middle, sandwiched in the middle, and you've got the common equity that sits on the bottom or furthest removed. So in terms of like least risky to most risky, it's the convertible notes, the preferred stock, and then the common. Good call, Dan. And so back on this $2 billion of convertible senior notes, these are due in 2030. So there is another note that's also due in 2030. So it adds on. Now we also have clarity that there can be multiple notes in any one year. I know some people were talking about they couldn't have, more than one convertible note in any one year. Now we have proof. We've got another note in 2030.
Well, but keep in mind that for the strategy, you're likely not intending to keep more than one note. But when you look at where the 2030s fall in terms of which ones are equity,
Yeah.
right? The
They're
conversion price on the
$150.
2027s was 143. These are 149. So
Yep.
these are essentially equity, and my hunch is you're going to see them disappear.
Yeah. We've got a conversion $149, $150 conversion price. Exactly. Okay, so we'll go back to it. Good point, Ben.
I also
Good
think
point.
that's a good question in the comments. It says, "How come 0%?" So what's the thinking, Ben and Jeff, behind like when they're pricing these? Obviously, the pricing period determines the premium, but is a 0% premium more, or a 0% coupon more valuable than, say, a higher premium? I would assume so, because they don't have to service the debt. But what do you guys think about that?
They've got to look at the entire picture here.
Yeah, what are you buying? What are you buying and why are you buying it?
So if they get rid of all the cash flow drains from these bonds, right? You do give up premium when you're going for 0%. There's a trade-off there. If these investors aren't getting a coupon payment, then the premiums or the strikes are going to have to come down and become more attainable. But for strategy, they need to focus on shedding all the cash flow drains that they have, because that's going to free up that cash to fund the dividends on the preferred offering. And they can always use the ATM to pay those dividends, but to the extent that they don't have to use the ATM to pay those dividends, I think that is the home run scenario. So right now, like the ones that'll probably get replaced, the 2030s, I think are like 0.625% interest on 800 million.
Yeah.
Someone might have it somewhere.
0.625, 800 million.
Yes.
Conversion price of 150.
So what's the carry on that, Jeff? What's that 800 times 0.625?
Annually is $5 million.
$5 million. So now divide that by 8%. How much of the preferred can that carry alone? So that carries $62.5 million of dividends on preferreds just from that note alone. So now if they keep shedding them and getting these rebuilt up at 0%, it just makes that easier. So they've already done a lot of, workforce optimization work, which is a nice way to say laid off employees and downsized. But that's a consulting term. But so they've already done a lot of that. So they've done a lot of cost cutting already. So I think you're going to start seeing their cash flow picture change back to probably being in that 60 to 75 million a year, which is more than enough to cover all the preferreds that they've got out now. Right now, I think they're paying something to the tune of $30 million a year to service the convertible bonds with the interest payments that they have. But if they get rid of all that, now that can just go to funding the preferreds. And if you're not hitting more dilution by using the ATM to fund those dividend payments, then that preferred stock just becomes even more accretive to this metric, right? The preferred becomes an absolute home run to the extent that they can fund most of those dividends out of cash flow. So at that point, you essentially make those perpetually, probably the wrong word because they're perpetual preferred, but they'll be better than convertible bonds forever if they can carry the cash flow on a portion of them, right? There'll never be a point where even using the ATM where that value proposition would cross over and they'd become less accretive than the convertible bonds. So that's why I think they're focusing still on rebuilding out the ladder at 0%. Doesn't mean that's what they'll always get, but I think to the extent that they can get as many of them down to 0%, I think they'll try to do that, even if it means giving up a little bit on the premium side.
So Ben, let's just can we back into that 62.5 million, that 8% figure? Can you walk through that from forwards instead of backwards?
It's basically just saying if they issued $62.5 million of preferred stock shares and the dividend on that is 8%. How much cash do you need to generate to carry that annual dividend payment? $5 million, right? So that's all I was doing, was
There it
just
is.
trying to figure out how much of a preferred offering does just freeing up the cash flow from that one bond that's only paying 0.625, right? If you look down, you got another one that's paying 2.25. That's a lot higher. So you could just drag those down, Jeff, those formulas, and
Yeah, here we
see
go.
what that ends up being. So one of those 18 million, right? That's 225 million of preferred. So it doesn't take long before they can just cash flow all of the preferred stock that they've got out there currently.
Just by relieving the
Exactly.
interest of the
Exactly.
Oh man, that's
Yeah.
such a great point. Okay, so oh man, that's so bullish. Oh,
Yeah.
that's
So I think
bullish.
that's the intent here for why 0%. I think they'll get as many as they can, and as rates come down, they'll continue to be able to get 0% a little bit easier, even further out the ladder, right? It does get
Right.
harder as you go further out the ladder because of those credit spreads out there. But, for right now, it seems that the appetite's there, at least at a 35% premium. We'll wait for the final pricing to see what it actually is, but that's where it seems to be.
30 What's indicating 35% premium to you?
That's all the news that's bumping around. So people see it, right? This isn't all a secret.
Yeah,
So it's
yeah,
getting
people see it.
shopped around in the
Yep.
back. So people with Bloombergs and people with other software will see the pricings coming through. So sometimes when you see that news bumping around, it is real. That's what they're shopping it at. So, I do believe that that's probably where they're at. And it would
Not
make sense
surprised.
if you went out and tried to price it on your own. So that's where I think they'll end up to attract more capital. I do expect it to be $3 billion at the 35. I think they might have been able to get 2 at 45.
2 at 4. Yeah, right. And it's all accretive,
Yeah.
right? Like the whole, like everything. If it's a 10% conversion premium, it's accretive. It's more accretive than the ATM. If it's 20,
Exactly.
like there's so much room to.
And right
to
now,
grow
the
there.
importance
So
is
you
getting
think,
that leverage back. I mean, obviously, you want it as accretive as you can get it. So you got to see what the market's willing to digest in these. And these are big numbers that they're out here selling. But you got to see what the market's willing to absorb at what pricing. And you want to make them attractive for these investors. And so that's what they're doing. They're towing that line and balancing, what MicroStrategy needs and what these investors need. And they find where everyone's a little unhappy and then they make a deal, right? And I think that's where they're at
Yep.
here at around 35%, which is still a great transaction for Bitcoin per share, Bitcoin yield.
I mean, that would be huge. It'd be huge. Just the fact that even having this conversation about potentially raising $3 billion of capital. I mean, this from announcement size, this is the largest offering that they've announced. Obviously, when everything was going hog wild back in November, that was a really great result. But they effectively sold the top on the IV blowout like in November. So even the fact if they're able to get it at 35 or 40% premium here, when IV has been completely crushed for 3 months in a row, that's still incredibly impressive to be able to raise that much capital. But if you're thinking about like what a 35% conversion premium, what is that on a stock price of $320?
Well, and think about the fudders who are saying they couldn't even get a convertible bond out with this IV.
Oh,
So,
I know.
that shut 'em up pretty
That's
quick.
just nonsense. People say that they say
Yeah.
they're running up. That's just crazy. That is so not true.
So you're looking at a $432
I'll
conversion
go
price.
130% above that.
Equals this times 1.3.
Yeah, so you got early
So
conversion around 561. So very
Right.
achievable, right? So to my thesis,
That's
Yeah.
all time high. That's all time high that we hit 3
to
months
my
ago.
thesis of get these out in
It's
Q1
like-
so that that 130% trigger becomes active in Q3. It's a very attainable trigger to be able to get these off the books while you wait and figure out whether we've got a bear market coming or not. It gives them the ultimate flexibility to be able to operate in case we do see any drawdowns, even if it's a 20 or 30% drawdown, not an 80%. It's still very advantageous if they set up the strategy that way to be able to take advantage of that 130% trigger this year still.
Right. Great point. All of this seems incredibly achievable, right? You've got 5 years for the price to go over $432. We were over $432 like 90 days ago.
We're going to be above that once we get out
and
of the flannel channel.
get out of the flannel channel. That's so
I've been in
true.
the
We gotta
dark.
get
Where
out
the
of
heck did the flannel channel come from? Is that a Josh thing?
It's a job.
Yeah,
Okay,
exactly.
that's a Josh thing.
Sounded like a Josh thing.
Yes.
Now he's
Yes.
posting like
Josh.
a horse with a flannel on the chart. It's just
I love following
Oh
that
my
guy.
God. Amazing. The dad jokes
they're
are
great.
incredible. I don't know. He must be using AI for the dad jokes. I don't know. He keeps coming up with them. But they're probably off his brain.
I think
because
that's just
is
who
an
he is,
AI.
man.
Josh is an
Yeah.
AI. I'm pretty sure. Yeah. Okay. Anyway, just we'll close this out. We'll go quickly, but $2 billion offering, $300 million green shoe. So $2.3 billion. That's where the $2.3 billion comes from. These are unsecured obligations of Strategy. And I think this is important to look at is effectively the balance sheet itself is collateral, right? Like in this transaction, the balance sheet of Strategy is collateral. So the Bitcoin itself is protected and shrouded by a corporate balance sheet. They're effectively using the Bitcoin as collateral, protected by a corporate balance sheet. Just meaning that whoever is purchasing this debt doesn't actually have an obligation to that specific Bitcoin at any point in time. If there were a bankruptcy proceeding at a future point in time. The notes will not bear interest. Notes will mature on March 1st, 2030. So we've got 5 years from now. The shares of its Class A stock, common stock, or combination. Oh, so the Strategy will settle the conversions by paying or delivering cash, shares of its Class A common stock, or combination of cash and shares. And then the notes will not be redeemable. And here's where you get into this 130% conversion price trigger. Ben, you want to hit on this?
Yeah, the 130%, it reads a little weird when you read it. You got to really look at the indenture documents to go through it in great detail, because it actually applies to MicroStrategy and the buyers of the bonds. They both get the benefit of that 130% trigger, but the holders of the bonds get it first. So they basically get the first chance to convert. And it's one of the reasons why people have been confused, even on like the 2027s, when they were wondering why Strategy didn't just call those bonds for cash. And the reason is they can't, right? Because the right of first refusal on conversion goes to the holder of the bonds. It's a protection that needs to be in place. Otherwise, there would be no reason for anybody to buy these bonds if they could just get redeemed at par for cash. So when you hear people talking about that, that's not an option. And it's a little interesting because if Strategy calls them early, they actually end up owing more shares. So there's a formula that's in the indentures that actually steps up the number of shares that the holders get in the event that Strategy calls it early. But essentially, the way that this works is in any quarter, if the stock price is 130% higher than the conversion price for 20 days out of a rolling 30-day period, then the bonds become eligible for early conversion. And once they become eligible for early conversion one time, they're eligible forever now, whenever they want from that point on. Doesn't matter if the share price comes back down. Once they trigger that, the bondholders can convert at any point. Usually there's a delay before Strategy could actually call them on the 130% conversion. I think, and I'd have to look back, I don't remember for sure, but I think they improved the terms for Strategy on the $3 billion offering that they did. And I think they got that down to 2 years. It was 2 or 3. I can't remember for sure, but they shortened that period that would allow Strategy to soft call, is what they call it. Soft call the bonds. And that's a major improvement because it used to be, I think one of them was 5 and another one was 4. So getting that down to 2 on a $3 billion offering is a really big improvement in terms. And it gives Strategy a lot of flexibility to be able to get those off their books if they decide to, even if it's going to cost them some more shares. It might be worth it if the markets are really favorable for them to get new offerings out the door that are even more accretive. So I'm expecting it'll be something like that. I haven't been able to read through this whole thing in detail to see if it actually says what that period is yet, or if that'll come out after they get these all the pricing terms finalized here. But that's essentially what the 130% is. And for the bondholders, it typically kicks in 1 quarter after they're issued. So you've got kind of this dead period, which is why I say that I expect them to issue a lot of these in Q1, is because that would make Q2 kind of the dead quarter where the 130% doesn't apply even for the holders. But then in Q3, it does apply to them. So if you look at the cycle theory on Bitcoin, that's when you expect that major top. Now, I'm not fully a believer in that. I think that we're probably going to get an extended cycle because of where the capital's coming into Bitcoin now and how consistently it's coming in, because you've got more companies like Strategy coming out running the LBE playbook. And so, but if you subscribe to cycle theory, then Q3, late Q3, early Q4 is when you would expect that blow off top, which is probably when you'd be triggering that 130% for all those bondholders. And if that price really spikes, they'll hedge out all their equity exposure and they'll just convert and they'll take their gains and they'll be ready whenever they come back to the market with another offering. So it would totally delever. It would potentially fully delever Strategy going into what would potentially be a bear market, whether it materializes or not. But that's the theory I'm working with. If I'm trying to figure out how would I strategically play this given the position that they're in right now, that's what I'd be looking at to give them as much flexibility as possible coming into the end of the year.
Yeah, you'd be deleveraging the balance sheet and approaching a potential bear market in like material strength in a very strong position, which could allow for even more capital to flow in a institutional fashion, getting this duration level exposure to Bitcoin, a duration proxy exposure, which the entire market is hungry for duration exposure Bitcoin. Particularly with reduced downside. I mean, it's a no-brainer from an institutional's perspective. I've been banging the drum like insurance companies should hold this stuff because it's a duration asset with minimized downside and exposure to Bitcoin. It's an absolute no-brainer.
Yeah. And the other thing to keep in mind is that because you get those spikes in the price, everyone's always wondering why they're not throwing convertible debt out the door when the stock price spikes. Well, it's because of the math that Jeff just did. You do want those strikes to be attainable for these bonds because the entire intent of these bonds is to settle them in equity. So you don't want to put yourself in a position where the odds are against you that you're going to have to, if it stays below the conversion price when they mature, that now you got to figure out what you're going to do there, which is probably issue another bond, roll it out further, right? Or you'd have to use... kick that can down the road first. And if that totally wasn't an option, then you'd sell equity to pay off the bond, but most likely you just roll it forward. So, but what they want is for these to be attainable. You give yourself another full Bitcoin cycle to hit those. So your worst case is you've got one more full Bitcoin cycle for the price action to be favorable for you and hit those conversion targets and get these things off the book so that you can reload. So they really like that these convert when the price gets really high. And then when that price settles back down and you kind of figure out where it's stabilizing, you start building that ladder back out again, get that leverage back up. And once it starts moving, you're repeating that cycle.
Yep. Yeah. It's just, setting up a new low, higher highs and higher lows.
You're building that value floor of the shares.
Forever. Yep. Okay. Last piece I want to hit on here, which I think is interesting, is Strategy expects that the reference price used to calculate initial conversion price for the notes. They'll use a volume-weighted average price of Strategy's Class A common stock from 1:30 p.m. to 4 p.m. Eastern Standard Time on the day.
Anybody think that was today?
Yeah, I'm going to go look at the stock because we can look at...
I'm man enough to admit that I was very short at 1 o'clock today.
Yeah.
I mean, when you've got events like these that you watch play out and you know what's happening, it becomes a very comfortable position to be in because you know that you've probably got sell pressure for half the shares that are coming in. And in this instance, it's a very defined window of time. So you know that all that shorting, which is going to be probably 50% of the shares, is going to happen in a 3-hour window. So you can be pretty sure that the stock's not going to pop during that time period.
Go up.
Not to say it couldn't, right?
Yeah.
And it could have happened where maybe tomorrow was the pricing period, which would have been fine too. But it sure seemed like it was today, because as soon as that clock hit 1:30, it started driving down.
Exactly. And that's what's on the screen here right now. And and then we also saw like a huge increase in call option purchase volume, like at the last 20 minutes, which
I was in there too.
I was part of that.
Same idea.
I was like, this is load. Like, we were going long here. So yeah, it's pretty illuminating when you look at this. And right, anybody that's buying this debt has every incentive in the world to shove the price down as hard as they can and in that pricing period, because that affects the overall conversion price, right? If it's 35% higher than 318, that's a lower conversion number than 35% higher than 330. So I wouldn't be surprised if we see less of this sell pressure. And I think that's why a lot of people have been talking about, if you're complaining about the price of MSTR going down today, you need to take a step back and really try to understand what's going on with the stock here, because I think a lot of people had anticipated something like this, as you have outlined, Ben. And if you didn't, that's totally okay. But that's the purpose of reading these documents and these articles. You have some understanding and going through this analysis, right? Like, these are announced, they're priced, and they're closed, and they're done. They're done in a very short time period. And now, any future convertible issuance, you may be able to.
You also tend to see it pop
have
the day after they do this pricing, and that means that these guys capture an immediate gain right out of the gate. So they love it. I mean, it's a great transaction for them because they're already in the money usually by the next day. But the reason why I was pretty confident that today was the pricing day is because all the rest of the 2027 bonds settle tomorrow. They all get anything that's left over gets fully converted tomorrow. And so they'll be delivering shares to anyone that hasn't already taken them. So just on the off chance that you have people that are going to sell, you don't want to do that on the day of your pricing here. So it seemed logical that they would do it today. And there were other people saying that they were using the ATM today, but I highly doubt it. There's no scenario you're using the ATM when you're pricing another securities offering. So I think it was just kind of that perfect timing between the settling of converting all the 2027 bonds and pricing these notes early. But I don't think there was probably a single dollar of ATM out there today.
Also, think about this, right? Let's go back and look at these. You've got 3 days between this, right? Announced on the 16th after market, priced basically on the 17th, and the pricing was announced on the 18th. So basically, they get priced. All of the paperwork and communication goes out to all of the markets, and then Saylor announces once the market's closed, here's the pricing, here's the capacity we have at this pricing. It's not like you can price it on that third day and then announce immediately after market how much capacity you got and like have all the documentation and all the shit ready. It's just logistically improbable. So yeah, I think that's why we've seen here, 13, 15, 4, 6, 11, 20, and then now we're going to see 18 and probably pricing tomorrow after market on the 20th. And I think it probably happened today. So cool. Somebody wants to hear from Dan. Dan, let the man cook. Do you have some updates on IV that you want to walk through?
I can share a couple of charts that kind of illustrate what you guys are saying. Ben, I have a question on that, on the conversions there. I read in the most recent 8K that 100% were converted, but converted for shares, the most recent convertible note. But I don't know if that actually occurred. I think, is it just in the 8K? Is it just the intent for these investors to convert to shares as opposed to taking cash redemptions, or is it the actual physical act of converting the shares has occurred?
I'd have to look, because I think when I looked at the last 8K here, it still showed, let me pull one up. It still showed shares outstanding.
Yeah, there was like 800
There was
million.
like 2 million shares left that hadn't converted in the last one that
Yeah.
I saw. Let's see.
Yeah, there was a few. It was a small percentage. I want to say it was
Yeah,
like 20%.
so about 2,050,000 were still outstanding as a 2.9. So some of those probably already converted, but the final day is tomorrow. So anyone who's dragging, tomorrow's the last day the shares are going to get delivered. So it's possible that you read it in one of the 8Ks. I can't say.
I saw
I've read
100% of the principal amount of the outstanding price. So I read the 100% in the wrong place. My bad, but I see it now.
Yeah.
Thanks.
So there's 2 million left, and those should be gone either today or tomorrow.
So that means either short interest is closed out, right? If those shares, if the debt has been issued and they were short in conjunction with those shares, that means the short position has been closed out, or potentially sold the shares at the market if they weren't completely hedged with a short position. Then they sold the shares at the market potentially, or they longed them. And if they have additional capital, that capital is going to be knocking out the door for this next offering. Like you don't even have to take your money out of the bucket, right? You just keep it, from this bucket over to this next bucket, sign up for the next one. And I'm not surprised that timing is like right next to each other.
Oh, that makes sense. Okay. Yeah.
Totally. You know what I mean?
I will say
Cool.
totally unrelated to this, but on the bear side of things, I was really glad to see Palantir get pile drive today because I was short Palantir and it was making me nervous. So
you're like, this thing is so
it
irrational.
was, yeah. I mean, I know exuberance when I see it, but I don't know how long it's going to last.
Dude.
That's not a position I'm planning to ride, but
just
selfishly, I was happy to see that this afternoon.
And Kramer this morning was like, the price was down 50 cents. And then he was like, we need the Palantir people to show up and buy the stock. And all of a sudden, like halfway through the day, dropped 11 or 12%. It was just like the inverse Kramer is just so good. And, it could be a signal or indicator for institutional capital.
I'm just glad he was on my side this time.
Sorry, Ben.
Normally I want him to stay quiet, but
you're like, shut up.
I needed the
Bitcoin.
assist. It was making me sweat a little bit.
Yeah, shut up about Bitcoin.
I think Kramer shorts himself. Right. Like he just believes it too. Like
it's a superpower.
Yeah,
he'd be incredibly wealthy if he did.
Are there inverse Kramer funds? Because if not, people. I think somebody was making one. I mean, there's funds about everything now. There's battle funds. You've got funds like short JP Morgan, long MicroStrategy is like a battle fund. Anyway, sorry. Over to you, Dan. Let's see what you got.
This is just the price chart with the converts. And I think I don't have the most recent one in, but you can see there's always funny business happening around these convertible note offerings. And the peak was one thing, but you zoom in down here. I really do think right now reminds me a lot of September, where you saw the price nuke from 150 down to 120, or right as that convertible bond was being priced, and you saw the IV at a historic low. So you can see the volatility here. You can see the volatility in September was is that October or September was quite low, and you had that first offering that kind of ignited this spark to the next move up. And you can see here today we're sitting at a historic volatility of about 50%, and we're kind of in the same position, but a worse position nevertheless.
It's interesting that the vol is significantly lower, and I don't know. It's probably correlated with MSTY fund inflows, people figuring out how to write covered calls, trying to write covered calls, selling a significant amount of premium out to tail option markets, providing liquidity that wasn't previously there.
Yeah, the Josh Mandel trade, like you've got people at the money. You've got people. Have you seen the posts recently where people are saying they're covered at the money and they've never felt so confident before? Like it's kind of nerve-wracking hearing that stuff.
Right now, today.
No, there was a post yesterday. Someone was like, "I've never been comfortable selling covered calls, but having watched Josh Mandel in the Flannel Channel, I'm now covered at the money on my entire portfolio."
Oh shit!
And I
they're
feel
gonna get screwed. People don't understand that Josh is so much more sophisticated than any of us in his trading that you should not follow what he's doing. Listen to what he's saying, learn from what he's doing, but don't follow him into trades, because that guy will see when the tide's turned and he'll get out and he doesn't have to tell you. He does not owe you an explanation on that. He might be out for 3 days before he remembers to post it. So, even guys like Jeff Parker posting now might be a good time to stop writing covered calls on MicroStrategy, right? I mean,
Yeah,
you should
there's no
probably start
premium, right?
listening. I got rid of all mine today. I had some, but just because I knew they were going to be pricing these bonds, so I knew it was going to have a drag. So, but I'm out now. I'm not riding any covered calls at the moment, but people are going to start doing that, and they're seeing Josh ratchet them down, and they're going to do the
you
same
rolled them
thing.
down today.
And you're a genius, except for
You rolled them shorter.
and
Yeah, you did
shorter.
roll
Yep.
short.
He
Yep.
rolled them down and
And
shorter.
you're a genius
so
until the stock
you know.
moves against you, and you don't know how to move out of those positions as fast as Josh does. So Josh will be just fine. I wouldn't be chasing him in size. Let that guy do his thing, but don't try to make it your
Yeah.
thesis.
And the way the IV of those options will move against you is the same way the IV will move with you if you're a call owner, right? So it's just like the stock doesn't have to go above that strike, or like let's say you're covered at a 400, like you sold a 400 call for March 20th. The stock can go to 350, 370 in a day, and that call will move so hard against you, like you won't even be able to look at your trading account. And then you're
Yeah.
going to buy it back, and the stock's going to run up because you and everyone else who sold calls short are now buying back the calls and just jacking the volatility up as they're levering up the balance sheet. So it really does seem like we're primed here for all these
Teetering.
people to unwind the short
Yeah.
position.
And IV is a mean reverting statistic,
It has been. It seems like it will be in the future.
right? It's a mean reverting statistic. So if it's like, is it lower than the mean
Yeah,
right
it's
now?
50.
Yeah.
The
Like,
mean's, what, 80?
Yeah.
Yeah, the 100-day trailing volatility is 100, and we're sitting at 45 10-day trailing.
Yeah, November we had 52-week highs for IV, and even if the price stayed at 500 a share, it would have still reverted down to something. Like even if
Yeah.
it didn't go down $150 like it did. So you got to strike while the iron's
Yeah.
hot, which kind of reminds me, like if strategy is considering, or has the potential to be deleveraged going into the bear market, I damn sure don't want to be leveraged going into it. So
That's a good point.
even as an option seller, I have so much long leverage. It's like it feels completely unnatural for me to have this style of an account. Like I think I had 7 covered calls
It's like-
on last week, and I took half of them off, yesterday and today. And if I get a chance, I'll close the rest out tomorrow, but we'll see. But yeah, there's going to be a lot of new options covered call sellers that are going to FAFO real soon.
Dan, your point on like it's like chasing your ass, right? Like if this thing moves fast opposite direction, to close them out, you're gonna have to bid it higher as everybody else is also doing the same thing.
That's kind of to your point. Like you make points like that a lot, Jeff, and I think it's well taken. And this is the same scenario, right? It's like everyone was in an MSTU at 500 a share, and now everyone's short calls. It's like
The sentiment
Yeah.
shifts are
Yeah, well,
amazing.
yeah. It's got to kind of zoom out, and you're kind of like watching the whole
As
thing.
soon as you
from
get comfortable,
30,000
though,
feet.
you get your face ripped off. You don't know what direction. You just know it's coming.
Yeah.
I mean, you can get a good sense of the
Yeah.
direction by watching people post very confidently. But I'm in one of those positions now where I'm going, I'm going to stay away from getting burned to the long side here and just, all right.
yeah.
I
I mean,
Go
like,
ahead, Dan.
and what's the risk reward here? You get 3 more days. Like if you were thinking about buying a call option for, say, sometime this spring, and you were thinking, okay, I'm going to wait 5 more days, 6 more days, and not pay that theta decay versus missing the entry. Like, I just don't see how, like, if you want to buy a call option, you're waiting here. I don't know what you're waiting for. I know the flannel channel is headed downwards, but
Yeah, and I'm not saying everyone's in trouble this week or next week, right? Because I think you're still going to get a few more pricing periods for these convertible bonds, but you don't know how the price is going to reset between them. If there's a week in between, you don't know what's going to happen. So, I mean, I get there's a lot of people that'll sell them deep out of the money. Or, I mean, if you're selling them and they're 15, 10 delta, something way out there, right? You're probably okay for a little bit, but I'm not. Yeah, there you go, 10 deltas, right? But you're probably. It's just a game where the risk reward. I've lost more MicroStrategy shares over time because I was selling calls that I thought were so deep out of the money there was no way I could get there in a week, and it got there a shocking number of times. So now I'm very opportunistic when I do it. I'm not, Soleil, he's got to keep grinding because he's got to beat MSTY, but I'm looking very opportunistically when I do this. There's other places I'll sell them that are a little more controllable for my style.
Meanwhile, Josh Mandel is sitting at his laptop computer eating cheese balls, right? Like you know it. Like he's sent pictures of it. He's
Guys
like
showing
sitting there just,
portfolio
like,
pictures of $20 million. He's got a giant thing of cheese balls in a laptop from 2005, and he's just out here just grinding on all of us. Yeah,
just watching all
you
the
don't need
candles
fancy
moving in
tools,
between.
people. That part's
That's the
clear.
secret ingredient I'm missing. I need the cheese balls.
Apparently,
Yeah.
Cheese balls.
Yeah,
But you know what?
got to live like
Even-
you're in college. That's a
Yeah.
success metric.
And people are going to get sucked in too, because even with low IV like it is now, the premiums are still far and like above most other stocks. So if you're used to
Great
trading
point.
Apple
Great
and you're
point.
like, oh, I can get 0.5% return on capital on it at the money covered call or something this week, and then you look at strategy, and even with this super low IV, you can still get like 2% return on capital every single freaking week. Some people will be sucked in by that, because that's insane profits compared to most other option trading. But I think the upside is just, it cannot be overlooked.
Well, what's the IV on a normal stock, right? 15 to 20 if it's a
Yeah.
good volatility, right? I mean, there's a lot that are lower than that, but so yeah, I mean, the pricing's always going to be attractive. And for some people, that's just the strategy, right? It doesn't matter if you lose the shares. For some people,
Doesn't
you're
matter.
just there for that premium that you can collect, which is better than what you're getting in the rest of the market. I mean, when I'm running scanners, I'm running them on the S&P 500 and looking for opportunities, and it's really tough to find good ones out there. I mean, it's a small pocket to find worthwhile, covered calls or cash secured puts to sell. So
this is something that Ryan used to bring up a lot, is like MSTR is more volatile than volatility itself.
Yeah.
Like the VIX index, like you could look at the VIX index and like MSTR is more volatile than the VIX index. And it's like that. Wow, that's an interesting statistic. And then that's what also makes products like MSTY so incredibly attractive, because it's like really agnostic. It's like harvesting volatility. And, in this new world, like everybody's working for the computers, right? Like you're just working against the computer. You're selling volatility to computers. And like, that's how people are making money. And it's just this new paradigm of like, everybody's working for a computer in a different way. And if you're interested in working on Bitcoin, you're working for the Bitcoin network. You're literally working for computers. And that's where this world's going, which is kind of an interesting thought. So anyway, Soleil, over to you. Do you want to chat on your challenge with MSTY, given that we just brought it up?
Oh yeah, same shit, different day. They're still far and away. Like, I actually caught them up when we had that little pump to 340. I was like within striking distance. I'm like, come on, just a little more. And then they got paid their dividend the next day, so that was like an extra, 8% that they just piled on top of me again. So I think
I do got to ask, how are you measuring it? Are you measuring it by their dividends, or are you carving out the capital return piece of that and just competing against their actual returns?
I'm tracking the capital returns, but really just portfolio size, period.
Okay.
So I started in my IRA. I started with 215,000, loaded it up all in MSTY, and then I created another account with an exact amount. And basically just, I don't know, after I was going to maybe do the whole rest of the year, but I'm still kind of anxious to see Jeff Park's product. I think he alluded to they might come out with something in March. So if their product looks better, maybe I'll try to beat them, but I would like to be up before I conclude the challenge. But yeah, so MSTY even is down from 215 down to, I think that account's worth 190 after getting paid 14,000 in in dividends. But yeah, my account's down to like 170. So I'm down like 20 grand on them so far. And really the only difference is I added a bunch of leverage. So they trade covered calls against synthetics. So they're buying a call and then also selling a put, same strike, same expiration. That adds up to one delta. And for me, I just didn't sell any cash secured puts. So I'm just pure leverage on mine. And so instead of synthetics, I have a poor man's covered calls on. So of course, anytime we lose 10% on strategy's price, all of those long calls are going down 20%. So that's just the risk you take.
So you may whipsaw
yeah.
back the other direction, and yeah.
If we get to 380, if we just get to like 380, I'll be ahead. So it'll be fine.
Yeah.
He's going to start sneaking leaps in there so he can catch up here at some point.
He's like, don't mind this. Don't mind this little.
One day
$700
Soleil's ahead
call
by
over
140%.
The all of the premium, like the 20 grand, I think in premium that I've collected over the 4 weeks. Was it 3 or 4 weeks? I've plowed all into the like the July 1080s or something. So yeah.
So you did go.
Yeah, MSTY doesn't own any July 1080s, so we'll see.
Yeah, and that's where I think some other interesting funds may have opportunity here that come out with slightly different structures that are maybe they're not selling as close to at the money covered calls. Maybe Hermes Lux 10 deltas, right? Maybe it's a whole portfolio of 10 deltas, and when IV's low, they go long, and maybe they throw calls on or something like that. So I'd be curious to see how this evolves. It's there's so much opportunity here just because the vol is so high. Like you can carve out and design infinite products on it that just have different risk return profiles, just like Sailor's doing. Offering this capital to getting different structured Bitcoin exposure. So interesting stuff. I was going to shift gears a little bit, get into our etc. Chapter, and Tim, I kind of want to bring you into the mix here as well. I'm going to share my screen again to Bitcoin treasury companies, and just to put this into perspective here. So MSTR with 478,740 Bitcoin. There are 80 public companies in different jurisdictions that hold Bitcoin. So MSTR has 10 times the amount of Bitcoin of the next closest company, being Marathon, holding 45,659 Bitcoin. So some serious scale there. The next top 10 companies that hold Bitcoin, excluding MSTR, hold 123,976 Bitcoin. So that's the sum of Mara all the way down to whatever this Hong Kong company is, which I haven't seen before. So MSTR has about 4 times as much Bitcoin as the next 9 or the next 10 publicly traded companies that are behind them, which just, if you think about the size and scale here and like how anybody could possibly catch them, it seems pretty pretty difficult for anybody to possibly catch them. And the remaining public companies below number 11 have 29,596 Bitcoin. So that's the remaining 70 companies that sit below them. And if you go look at how much Bitcoin we think MSTR is going to purchase over the next couple of days, potentially around 30,000 Bitcoin. Basically, this new purchase that they're going to have as a result of this convertible debt that they issue will be more Bitcoin than the remaining 70 publicly traded companies that hold Bitcoin on their balance sheet, which is an astonishing figure. Just the general scale here is pretty incredible. So, Tim, I know you talked to a lot of these Bitcoin companies. Just recently, we also heard on the news that Fold has gone public. So Fold being the first Bitcoin financial services company, which is really exciting news on the horizon. I think their stock was up, 15 to 20% today, which is exciting news. And, all of these companies here have the ability to continue generating additional Bitcoin yield, Bitcoin per share. And I think that we're getting to this point where the traditional financial world is going to have a really difficult time starting to value these things because these new companies that are coming on the scene have different diversified cash flow. And it's like, how do you price a company in a traditional finance system when it's denominated in a totally separate Bitcoin ecosystem? And it's becoming very, I think, challenging for a lot of the traditional financial world to like wrap their heads around it. But Tim, I'd be curious to, you've had conversations with so many of these people. I mean, what's going on in your neck of the woods?
Yeah, I guess as far as themes, I've been a little surprised just from like an ego and gravitas standpoint that most, if not all of the companies in India and Germany and Semler and Kohler, I mean, they're all, whether it's the chairman, the CFO, the whatever executive, they're saying, we are following the strategy playbook. Formerly, they would say, we're following the MicroStrategy playbook. I mean, it's just, they're not trying to say, well, this was my journey to Bitcoin and we're doing this a little bit differently and this is all about me. I mean, they're literally just pointing like directly to Saylor and saying like, we're copying this guy, which, is great, right? It's like Orange Coin good, Bitcoin treasury strategy good. Like you'll get a lot of mileage out of that, but I don't know. For some reason, I just was kind of taken, not aback, but I just thought it was super interesting that everyone was just kind of like, yeah, we're kind of doing basically the same thing, right? Maybe with some, little tweaks here and there on the finance end. But yeah, an hour ago, Metaplanet said they acquired 68.59 more Bitcoin for 96 grand and change, Bitcoin yield of 18%. You got David Bailey retweeting it saying now that they've got their flywheel in place, he thinks napkin math, they should be buying 1,500 plus Bitcoin a month until they exhaust their capital plan. I didn't know until tonight that there are several companies in Japan that have adopted a crypto treasury. Not maybe the best idea.
Oh, really? Not Bitcoin, like a beyond, like other assets. They're buying XRP and
Yeah.
shit like
So
that.
like Metaplanet's still the only Bitcoin treasury company
Lira?
in the country. I mean, they just have so many advantages. It's kind of unbelievable. What else? Yeah. Yeah,
Wow, that's
it's like
fascinating.
Orange Coin good, Bitcoin treasury strategy good, and I think you guys have mentioned this before. But, there's definitely a difference. Some of the noise that's probably come into the market even already is companies will announce that they are going to pursue a Bitcoin treasury strategy, but then you have to put those in one bucket. And then in a separate bucket, keep track of the ones that actually buy Bitcoin for the first time.
Yeah, we're in the show me phase of this strategy, right? There's a
Yeah.
lot of people that are doing it because they've seen the equity pops just on the announcement and they're using it as a marketing tool. So now you got to be a little careful. I've had to deviate from my I'll support any company supporting Bitcoin. One, because now there's too many of them. But two, because I know that you're going to get the people that don't even have a shot at doing what they say. Like I think we've seen 5 to 10 companies that have come out with plans that they couldn't possibly execute. It was like a Hail Mary on penny stocks, right? And they were trying to reignite the business, and that it
Right.
isn't the same thing. So you got to look for the people that are really serious. I do also wonder when you look at the different financial markets across the world, I'm not an expert on them, so I don't know the answer, but Japan's got it very unique where there's no naked shorting in their market. And so Metaplanet has this massive advantage. So I can't understand why other companies in Japan aren't doing this. Because imagine MicroStrategy if you took all the naked shorting pressure out of this thing, right? I mean,
Yeah.
it just allows you to just continue to move up. So I'll be curious to see how their ADR shares perform long term in the US markets. But it's just such a unique scenario that I got to imagine there's a few others of those in different markets around the world. So you'll probably start seeing more of these companies start popping up in each of these different financial markets where they've got their own unique setup for an LBE strategy, and particularly if they stick to Bitcoin and don't get distracted by all the other nonsense that's out there. I mean, why are you trying to reinvent this right now? You've got one asset
Right.
that's made it through all the turmoil that's been thrown at it, and you're going to go set up an Ethereum or a Ripple reserve. Like, get out of here. It's Bitcoin or nothing. So, but I got to imagine that you're going to see a lot more copycats pop up globally, not just in the US markets. I'm sure you'll see it in the US markets, right? We've got all the access to capital. It makes it really, really easy. But in those other markets, I think that they're going to have some really unique restrictions out there that it's going to make the value proposition really significant for some of these companies. And people discount a little bit that when you go into this strategy, you're basically putting yourself in a perpetual capital raise, right? You're always in a capital
you're always in a
raise,
capital. Yeah.
which is a great thing because you're building this war chest that most other companies can't achieve. And that's such a competitive advantage down the line. Some of these companies don't even have to take the same stance that Saylor takes, where he's, in the you never sell your Bitcoin. You've got that camp, but not everyone's going to be in that. Some of them are going to see this as there's a void in the market. I can fill that void and provide a unique product that people want in volatility. And I'm going to ride that wave for as long as possible. And I'm going to accumulate this massive war chest. And when the conditions change, I'm going to reinvent myself into whatever I want because I've got the capital to do it. So if you're in an
Optionality.
industry that's competitive, and I think we talked about this already, Jeff, I just can't remember where. Oh, maybe it was MicroStrategy Mondays. Yeah.
Monday.
I don't know what's going on anymore. But, so when you get that type of optionality for your company, I mean, you have to evaluate that. It's such a competitive advantage against all the competitors in your industry that if you're the only one that embarks on actively accumulating capital for the long term, you're going to be so much stronger than everyone who doesn't or focuses on all these initiatives that are massive cash burns. If your projects can't beat the hurdle rate of Bitcoin, you're losing, right? So it puts you in this really awesome position strategically that gives you a future. And not every company is going to have a future. Most companies aren't going to have a future. You see that. I mean, how many companies survive 30 years? Not that many, right? Something happens.
Yeah.
So if you want to stay or push that off and make sure that you've got a future for your business, here's an opportunity. Align yourself to the incentives of all the pools of capital in the world, put yourself in a perpetual capital raise. And when it's time to adapt and it's time to transform into whatever your next figure is, you'll be ready and you'll have the money and the assets to do it. And you probably won't even have to sell the Bitcoin. You'll just borrow against it and turn into whatever you want to be. So, I mean, it's kind of a no-brainer. And I think you're going to see a huge number of companies enter this. And I know you see it all the time, Tim, so you can't be surprised by that at all.
I think, of course, we wish everyone well, but can you imagine being a company in Japan and adopting like a bucket of crypto strategy and then like looking at Metaplanet day after day, quarter after quarter?
Just totally rip, just like in your
like
face.
My prediction is like by the time this is all said and done, you'll see every single flavor, right? You'll see a LES and you'll see an LSS. You'll see a leveraged Ethereum strategy in the US. You'll see a leveraged Solana strategy. And you'll see all this stuff that's basically just not going to work, in my opinion. But
you'll also see people try to compete too heavily on volatility. They'll lever too high. Right. Yeah. Someone will go, well, if MicroStrategy can do it at 30, imagine what I can do at 80. The market's going to love my product. Right? You want volatility, hold my beer, right? I mean, you're probably going to see some of that, and you're going to see why risk frameworks are really important when you go down a strategy like this, because it's easy to get excited and go, there's cheap capital out there. I've got a product I can offer them. I should just sell them as much as I want. And you go, not if you want to be around for the long term, right? This is a very measured strategy. And it's a very low leverage strategy compared to most corporations in the world. And nobody's worried about their leverage.
Yeah.
Right. It's just because they're borrowing to buy Bitcoin. Everyone's concerned, but that's just silly when you watch what's going on in the macro landscape. But it puts you in this unique spot. And Metaplanet found the perfect pocket to do this because the yen was so weak and you had the whole unwind of the carry trade that was going on out there. It was a disaster. So they became a life raft for capital in Japan. And I can't believe that there's companies launching on other cryptos. People put themselves in this position all too often, and you see it in all phases of your working life too. And a lot of businesses fall victim to this, where you try to be creative for creative's sake.
Mhm.
Like you just feel like you can't do the thing somebody else did because you've got to come up with some new brilliant idea. But Bitcoin's the idea, and it's still emerging, and it's still got a long ways to go. You don't need to get creative here. You just need to find the growth and inject it into your business. That's all you have to do. And so I hope companies start coming around to that, because the ones that go and try to, hit these lottery shots, I mean, those are gamblers, right? That's a different thing. When you ask anybody that's in the space and you go to any of these other coins and you go, in short terms, just give me the value proposition of this asset. What's the value proposition here? No one can give you one. It becomes this whole convoluted word salad of all these techie terms and cypherpunky terms out there that, they're throwing at you, and you can't come up with a single use case in your life for why you need it. But what people do understand is store of value. They get that. It's easy, right? You point to the money. Everyone's starting to understand there's a problem with the money, right? All right, you've identified the problem.
Asset without an issuer.
Now you look at what qualities does it take to solve that issue. And we've got an asset that's set up to do exactly that. So you don't need to reinvent this. You don't need to come up with your own flavor, right? I mean, the market's been proven for you. So it doesn't need to be hard, but people are going to make it hard. It's human nature. Everyone's trying to make themselves the next great innovator of the space. You don't have to be. How about just be successful? Why is that a bad outcome, right? I mean, we don't have to overcomplicate this. So anyways, I'll get off my soapbox, but that's what I see happening when people start trying these new cute strategies around this. And you go, you're betting the farm on vaporware, and you've got to know it, or you did no due diligence and it's negligent for shareholders, right? I'd be furious as a shareholder if someone did that.
I love the comment, still waiting on the first company to adopt an NFT treasury or NF treasury. Yeah, it's wild. Do any of you guys have on the chart like the volatility of Metaplanet versus the volatility of MicroStrategy? Strategy. Because I just know that Metaplanet is more volatile. So I was curious what kind of leverage ratios. Maybe that's something, Dan, I can dig into.
Yeah, I haven't looked at it. No.
Yeah, I haven't paid close attention.
I don't have leverage ratios or IV or anything like that. I mean, the relative scale is significantly smaller, but I mean, they're holding 1,700 Bitcoin. They're like top 20 largest Bitcoin holding company. If the world shifts here into a Bitcoin treasury strategy, they're going to ride up the leaderboard really quickly. And Ben, I think you hit on a few things there, as always, that are incredibly good. But the companies that do adopt this strategy, one of the biggest things they need to take into consideration is an enterprise risk management framework. Like managing risk is the name of the game here. Like I think that's why my insurance background sees this stuff like very, very clearly, because that's all insurance companies are capital vehicles that manage risk into the future in perpetuity. And how do you manage that capital, and like what framework do you have in place to manage that moving forward? So like that's what all of these companies are going to have to eventually start doing. And you're right, there's going to be companies that are going to YOLO the farm out here and like crank up leverage to 80% because they feel behind or something, and they feel like they need to have the better idea, and they're going to get wrecked. I mean, the same type of thing happened with FTX, right? Like if they had an enterprise risk management team, that wouldn't happen. They would have said, you're crazy over leveraged here. What the hell
corporate governance doesn't go away, right? It becomes far more prevalent when you're doing a strategy like this. The problem a lot of the companies will run into is they're going to be starting from zero. You have a massive advantage as a business if you've got initial capital to deploy, because then you've got that fair value of the Bitcoin on the balance sheet, you've got that buffer already where you can start getting into a responsible leverage ratio. But if you're trying to use leverage to kickstart the strategy, like your first acquisition of Bitcoin is on leverage, now you're kind of riding the edge. You don't have the same buffer. So, if you see companies that are doing that, I'd be a little wary, because I do think that you'll see a lot attempt it. And maybe they've got the cash flow to support it so they can use it to get started, but some probably won't. And they'll just try to do it with leverage, and they'll just try to do it on the basis that they think the value is going to go up in a short period of time, and they'll create that space for themselves. But you do have to pay attention to that when some of these new companies are entering the market, so that you just know what you're looking at, and you know either the strength or the weakness of the strategy. And sometimes the right move is to sit on the sidelines and let it develop for a little bit. You don't always have to be the first one in when somebody announces. You got to see, is this a management team that really understands controlling the risk here? And do they seem to have a long-term vision for how to execute this, or are they just YOLOing right now? Right? It's important if you're investing and not trading.
Right. Another thing you brought up, and we talked about this on Monday, but for those who weren't there and listened to MicroStrategy Monday, thinking about optionality, right? Strategy holds $49 billion of Bitcoin. And I think it's helpful. Like, this is, again, just the world I used to operate in. This is the list of largest reinsurance companies on the planet, sorted by total shareholder funds, so total shareholder equity between these reinsurance companies. So Strategy alone, holding $49 billion of Bitcoin, in this circumstance, they would be the fourth largest reinsurer on the planet with the amount of Bitcoin that they hold. Now, if Bitcoin 5x's to $500,000, they would be the second largest, right behind Berkshire Hathaway. And if it goes to a million, right, they're probably bigger than Berkshire Hathaway at that point. And you can have a small component of your company, 5-10% of your company, be larger than many of these other reinsurance institutions that are operating in the market. So this is to emphasize just optionality and like scale of optionality. Like what is a company worth? What is a company that's got $250 billion of unencumbered capital worth? They're worth, like, who knows what they're worth, because they can do anything with it.
I think that was the scenario we were running through, right? Like, what if MicroStrategy gets 800,000 Bitcoin? It's 300,000 a coin. So they got $240 billion and they deleverage themselves. And now you've got $240 billion of unencumbered capital. What can you do with that? And then when you looked at that insurance thing, you go, well, they could carve off a quarter and spin up an entity that does that and be in the top 5 of the companies that are doing it, right? I mean, the optionality is whatever you want. With $240 billion, I think that there's only like 30 companies in the S&P 500 that have market caps higher than that. So, what can you become? Anything, right? It's long-term optionality. That's why I think you do have to focus on this strategy as a long-term execution strategy, because you are building yourself to be in the strongest position to be the major player in whatever the next thing is. And we don't know what that is in a decade. We don't know what it is in 5 years, right? Things are moving fast. So you don't know where the right area to plug in is. You just have to have the capital to be ready. And it doesn't mean they sell their Bitcoin, because now you're seeing all these major banks become players. And that means that the lending is going to start ramping up, and you're going to start seeing products that are, SOFR plus arrangements versus, 16% or whatever we're seeing now. So those rates are going to become much more reasonable. And I think that they should become probably less than most borrowing because of how liquid the collateral is. And that's something I love, because the first job I had was commercial banking during the financial crisis. I know what it means to try to go collect on your collateral. I know what it costs to get the collateral. I know the haircut you take trying to liquidate the collateral. Bitcoin would have been a dream. We would have been out of all our predicaments in 5 minutes if the collateral was Bitcoin, right? Would have been very easy. So people greatly underestimate the desire to package this into lending products. Just imagine a mortgage or a car loan where you attach even a small piece of that being Bitcoin that just stabilizes that loan. You over collateralize it, you get a lower rate. They've got at least one piece of collateral that they know is immediately liquid if they need to. I mean, that market's going to evolve so
Yeah,
massively.
it's gonna be so
So
sick,
massively.
dude. It's
And
gonna be
people
so
aren't
sick. We're gonna be
comprehending
part
what
of it.
that means, but
Yeah.
I'm excited for it because I've lived in that world. I know what the impact is. Jeff, I know you've seen a ton of applications here where you can apply this. There's so many possibilities that it's hard to be anything but really long-term bullish. That's why I say I actually think the biggest win on MicroStrategy doesn't necessarily even come while they're running this playbook. I think it comes from the next phase of the
2030.
transformation, right? Every company's in a perpetual state of transforming if they're not dying or going out of business. And MicroStrategy is no different. This is the strategy today, but it'd be really naive to go, this is the strategy forever. Maybe it is. And you probably do keep trying to acquire Bitcoin through these methods as long as capital's cheap. Why not? But when you have all this capital and you get that flexibility and that optionality in the future, you can do some really amazing things. And I don't know what that's going to look like, but a lot of us have met that team, and you can't be anything but confident in their ability to think long term. So I have no reservations about them being able to utilize this effectively in whatever that future financial ecosystem looks like. So that's why I look at this long term versus a trading asset.
Bingo. And once everybody realizes that you can get all these really great loan products by holding Bitcoin, everybody and their mother sells their Nvidia shares and their Apple shares and their Tesla shares and all of their overvalued Mag 7. Like all of the Mag 7 stocks combined is worth like 9 times what Bitcoin is worth right now. So I'm imagining a world where you have this huge capital drain. If these products really do exist, or if they start being created and they start like becoming mainstream, I really can see a world where a lot of value is drained out of some of these really large equities to go chase some of these really brilliant opportunities in the lending market with these new products as collateral, pristine collateral that can be held by multiple people. It's like you can't do that with
And
an
it's
equity.
speed to capital.
I
mean, when it's
speed, it's
asset-based
fast.
lending, right? And that makes it really clean because you don't have to do any of the credit underwriting. So they're not going to have to go pull credit reports on you. You're not going to have to give them a personal financial statement and 3 years of tax returns. And you don't have to go through all that.
It's like,
it's
there
an
it
asset.
is.
The asset has value. It's a liquid asset. You want to borrow 50% of that asset's value? Okay. Here's when you'd have to top it up. And here's when we'd liquidate you. So, here's the warning period you're going to get. I'm sure there'll be scenarios where you can provide personal guarantees so that they won't liquidate you, right? I think all these things are going to come into the ecosystem here pretty quickly. And if you don't think people are going to want to access the value of their Bitcoin, you're out of your mind. And when you find out how easy it is to access the value, people are going to be shedding a lot of their illiquid assets to move it into Bitcoin because the speed to access the capital is instant, right? You'll be able to do that so quick. The tech layers on top of that will be so fast, it'll be seamless. So it's coming for sure. And it's going to be really powerful. And I think it's going to move a lot of capital into Bitcoin for just that reason alone.
Yep. Absolutely. All right. We're getting up on hour 40 here. Let's go. Final thoughts. Last people. We'll go around the horn, and then we'll wrap it up for today. Episode 18. We'll put it to bed. We got 11,858 people. And maybe I will start with a quick one. Might be like a couple minutes, but real quick. My final thoughts. Official government headlines. CPI 3%. This is govinflation.com. But real inflation of CPI is actually 10.6%. So real rate of return, negative 6.3%. Monetary supply is going up. Ben, you also made this amazing post. Very strong group of shareholders that added 1 million more shares to their MSTR holdings in Q4. USB, Cantor Fitzgerald, Clear Street, Bank of Montreal, Norges Bank, National Bank of Canada, and BlackRock, which is all incredibly exciting, very bullish. I think a lot of this is probably tied to QQQ capital coming in the door. Very, very exciting stuff. So I couldn't be more excited about MSTR leveraging up the balance sheet, throwing more convertible debt into the mix. There's going to be so much confusion on the horizon. Prepare for more bears coming out of the woodworks. We're going to have to throw the koala bear, images out all over the place, and the teddy bears and psychedelic bears and all that stuff. So Appreciate the time, everybody. I'll go over to you, Soleil.
Yeah, going back to that chart you listed where just company after company that's adopting the playbook. And it just reminds me of my favorite Sailor quote when I saw him. He said, "You invest in an asset when it's two things. One, disrupting, and the fact that everyone is copying their strategy just proves that. And two, they're the clear winner. Like nobody's close. Nobody's anywhere close to the amount of Bitcoin that they have. So that's all I need to know."
Long.
Long.
Over to you, Dan. Yeah.
I think it's an exciting day that we got the announcement for the convertibles, and in the midterm, things are looking really good. So super excited.
Bingo. Bitcoin treasuries.
So I posted or reposted today a video of Adam Back going through, I don't know, 19 different reasons why we could like the bull market hasn't even really started yet. And so I posted that in response to, I don't know, I had 400 or 500 comments of people asking why I'm saying Bitcoin's going to $1 million this year and $2 million next year. Well, just listen to Adam. I mean, there's so many things. The news cycle is like amping up. I mean, we don't even need to really go into Trump and like every single day it's something, every single hour, right? Lutnick's out there tonight saying that they want to abolish the IRS. I mean, it's one thing after another. And I think part of the reality is literally within the bounds of the law, anything could happen. Like Bassett and Trump could quickly and strategically buy up to $40 billion of Bitcoin by utilizing the existing Exchange Stabilization Fund, which was established in 1934 under Section 10 of the Gold Reserve Act. Now, is that going to happen? 50-50 shot. Maybe, maybe not. What we really need is obviously Congress to pass legislation to make a permanent strategic Bitcoin reserve. That's going to take some time. So yeah, so many interesting things going on. Quick shout out. One of the comments, I just posted my pod with LaDozier. I think someone said LaDozier revealed he's a real person. He's not an AI bot.
Nice.
And I think he's actually going to be in Orlando for those that are going to attend the Bitcoin for Corporations conference. So that's pretty cool. And then Jeff, I'm assuming you'll touch on this at the end. I don't think we're going to be here next week.
Correct. Correct. No True North next week. Yeah. Many of us will be at Bitcoin Investor Week in New York and, running around with orange ties and stuff, talking about Bitcoin things with Bitcoin people and maybe non-Bitcoin people. And so no True North next week. We'll make an announcement on that. Thanks.
Yeah. I think just one more thing, if we have 30 seconds. I loved on Monday listening to Ben talk about collateral and like chasing cars around the country. And I mean, you just think about how much it costs to just send money, fiat money, from one app to another app, from one app to your bank account. I mean, you think about anything in life, whether it's a house, a car, all these closing costs, broker fees, transaction fees. As Kathy Wood points out, right, that there's like 9 different people involved in like one transaction. With Bitcoin, it's only 2. So I think it's going to be really exciting, not just the store of value and the number go up, but things on the Lightning Network, new products and services that people come out with, tech evolution. I mean, I've heard noise about to what you guys were just talking about, a lending product announcement sometime in the next week or so, probably. So just all those things. And then, I mean, just how expensive it is from a collateral perspective. I remember when I was moving into a house 10 years ago, we ordered some couches off Wayfair or whatever, and it like went to the wrong house and in like someone's closed garage. And so, we're calling like, hey, we didn't get our couches. And they're like, all right, we'll send you some more couches. And then we found the couches and they're like, oh, just keep them, right? Like, it's not going to be cost effective. So we had like twice as many couches as what we needed. And like, that's a real story. So like, I don't think the collateral part of all of this that we keep talking about can be understated. And And
Yeah.
so super exciting.
People don't generally think in the world of collateral. Like it's not taught. Like I wasn't taught collateral. I learned collateral by working in reinsurance and learning about collateralized reinsurance. Like that was how I learned about collateral. And then, buying a house, I learned about collateral, like because I signed some paperwork, like that. And so most people don't even like experience it or think about it in that way. And everybody should be thinking about it in that way, because that's the way the new Bitcoin economy will be developed, is by collateral, the world understanding collateral use cases. Yeah. Cool. Over to you, Ben.
Oh, I talked plenty. So I'm just going to point out that, of all of us, Tim is still downtown grinding it out from an office. So if you think there's a harder working guy in Bitcoin, you are mistaken. So I don't know where all these sponsorship dollars are going in media, but that's the guy right there. That guy is working.
Absolutely. Working his butt off. Cool. All right. Final count, 12,593 eyeballs. It just takes a couple eyeballs to, buy Bitcoin and buy MicroStrategy. And yeah, excellent. A lot of fun on the horizon. Thanks everybody for joining. Appreciate the time. And we will catch you in 2 weeks for episode 19. Will it be March at that point? I think it'll be March. So we'll see you.